Alright, welcome back everyone. So recently, Amazon, Google, and potentially Tesla have all announced stock splits. So today we'll be taking a look at what exactly a stock split is, why this may concern you, and whether or not you should invest into these companies right now or wait until after the stock split. Now, this week's sponsor is that of Lightyear. They are a relatively new platform to buy and sell different types of stocks, such as Tesla, Amazon, and Google. I've been using this app quite a lot over the past few months. I have over £5,000 of my own money held into the account. For anyone that wants to sign up and receive $10 for free, there is a link in the description below. So check that out if you're interested. And with that said, let's jump straight into the video. And so back on March the 9th, Amazon announced a 20-for-1 stock split. In addition, the Amazon board has authorized a buyback of $10 billion worth of shares. For anyone that currently holds Amazon, whether it's a fractional share or a whole number, that share count will be scaled up 20 times. So let's say you hold one share of Amazon, you'll receive an additional 19 shares, making it 20 shares in total. Amazon is not the only company that announced a stock split. We also have Alphabet. And so Alphabet is also performing a 20-for-1 stock split. And then potentially we have Tesla as well. We're waiting for their board of directors to announce whether they approve a stock split or not. And so you're probably wondering, why do companies offer a stock split? If there's a 20-for-1, does it mean that you earn 20 times? Quite simply, the answer is no. The reason is that the actual share price is also divided by the amount. And so as an example, with Alphabet, current price of $2,717, divide that figure by 20. After the stock split, that will result in $135 per share. And so if there's no actual increase in the ownership and a decrease in the stock price, what is the reason for a stock split? And the reason is pretty simple, and it's to entice individuals to buy into their stock at this lower price. The thought process is that if the stock is lower and you receive a whole number, then it appears as though the stock is at a discount. And so when I look at the likes of Amazon and I see a price point of $3,155, it's a lot of money to own a single share into the company. But when the price becomes $157 after the stock split or thereabouts, I'm much more incentivized to pay over $175 and receive an entire share. And because of that perceived behavior in that the stock is cheaper, or put more simply, a more fulfilling process when receiving an entire share, that can potentially lead to an increase in the stock price. And so that $150 or so can then push up to $160, $165. And so for companies out there which have larger market caps and also have a higher share value, reducing the stock to more sensible values can help push the market cap of the company even higher. We saw exactly the same process when Tesla announced their stock split back in August 2020, when they announced a 5-for-1 stock split. And from that point onwards, the price has only ever gone upwards. Now, stock splits don't always lead to an increase in the price. It could be that the underlying company is not performing too well. And if they were to announce a stock split, then there is just no guarantee that the price will increase. But for well-established companies out there, the likes of Amazon, Alphabet, and even Tesla these days, there can be an expectation that after the stock split, the price increases even higher. And so for anyone that believes in the long-term vision of these companies, purchasing the stock now may be a better opportunity rather than waiting until after the stock split. Be aware that a lot of platforms out there, and this includes that of Lightyear, you're able to purchase fractional shares. And so if you've got an extra £100 or dollars, then you can buy a fraction of that company, whether it's Tesla, Apple, etc. And then your fractional ownership will increase. Of course, as I said earlier, the price will decrease, so it becomes a constant value. But generally speaking, with the recent stock splits that we've seen, it's highly likely that these prices will continue to push up. But as with any company out there, always buy into the ones that you really believe in the long-term vision. The types of companies that are announcing these stock splits have very large market shares, and realistically we'll want to wait another 5 or so years before we see a large difference between the current price, and that's for the likes of Alphabet, Tesla and Google. If you're trying to look for companies out there which have a higher growth potential, then for the time being you may want to look at other companies. And so in future videos I'm more than happy to talk about other growth-based companies which have a much larger upside. So do comment below if you wish to see that. New videos are posted every week, so for anyone that's new to the channel, definitely consider subscribing. Thanks to anyone that has reached to the end of this video, and with that said, I'll catch you in the next one.
Lately, I've been feeling guarded. This is me, leave it or love it. They said this and they said that. I'm too tired for all of that. Yeah, I'm better when it's darkest. I can't lie, yeah, I'm a fucking goddess. I'm a king and I'm a queen. I'm not scared of anything.